Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's late in the evening on Sunday. This is the weekend strategic update webinar, and this will be uploaded to the Clueless A YouTube channel for free viewing by all members and for any other interested parties out there at Clueless A Trading on YouTube. It's approximately 10:38 p.m. We're just looking to monitor some of the overseas action prior to doing this video, so I have a better idea of what might happen, or at least make some half intelligent forecasts of what's going on. And that's the reason for this late recording, which you can listen to at your own time between now and the market open tomorrow. We have a lot of members on the West Coast and a few overseas, so obviously from a time zone standpoint, it's early evening for them. For us in the East Coast, it's approximately 10:40 p.m. So saying all that, let me just dive in. We have a very, very busy week coming up. I'm trying to keep this as concise and to the point as possible, not ramble on for an hour or so. Try to keep this within 30 minutes. I will also be doing a quick second video on the E-minis, which are on my other screens, and that will follow this one shortly. So saying all that, we have a very busy week coming up, and we have central bank meetings that are the main focus this week. That's to kick off on tonight, for example. Japanese central bank is going to be announcing their feelings, their policies on their monetary policy. We have Monday, July 30th. Well, it's going to be Monday. It's Monday, July 30th out there. Then we have our own Federal Reserve FOMC meeting announcement. That's on Wednesday. Very critical. We know that. Then we have, I'm looking at some of the calendar on my left-hand side here. Then we have, we have a big employment number coming up at 8:30 a.m. on Friday. We have the rest of the stuff, the standard stuff, factory orders and things, which obviously make it have some market impact coming out on Thursday. We have, most importantly, I repeat again, Wednesday is the Fed meeting, 2 p.m. And then we have, I'm just trying to look here. So we basically, the Japanese central bank, we have our, the Federal Reserve, United States Federal Reserve coming up on Wednesday, and those are the two most important central bank meetings that come along the way. This week. In the meantime, all kinds of stuff. President Trump tweeting that he might shut down the government. It's the same old stuff. If he doesn't get the immigration bill done, if the Democrats don't concede to some of the demands. So all kinds of stuff, that's standard procedure. We're going to get it. We get political news coming out from the Mueller probe, Russia investigation. We're all used to that by now. And we know the markets react short term on that stuff, and then they move back. So, like they say, it's called the law of diminishing returns, which simply means that if you keep on it as the cause, the effect of something eventually diminishes as it keeps on happening over and over again, right? So it's the same thing in life and the same thing in trading. So saying all that, let me get straight to the point here. What that all summarizes to, that we're going to have, again, extreme volatility. So what we try to do here at Clueless A Trading, as you all know by now, is we try to minimize the emotional effects and try to maximize the benefits of tactical selective trading, which we had some huge winners. Big plug here. If you want to see some of the highlights of our performance, you need to basically go to the Twitter feed. Number one, we have had fantastic winners. I'm not going to sit here and list them one after another. We have huge winners. We even had a killing, an unbelievable trade on the Facebook straddles, where the straddles went from $1 to close to $30 on the put side. So you go figure, that's 3,000%. All right, and $1,000 goes to $30,000, $100 goes to $3,000+. These are big numbers, okay? And then, of course, the call side went to zero. So $8 calls in the money on Facebook went to pennies, and the $1 puts went to anywhere from $20 to $30. There's serious stuff here, and that's the power of doing a straddle trade. And I'm no major option strategy expert. As you all know, I give you suggestions, and then you can basically construct that into your own option strategy. But that's the simplest way of doing it. And of course, you need an extreme move on the underlying asset, on the underlying stock during that earnings in order to maximize those type of returns. We have had a lot of winners. We have a lot of winners. Okay, we had Boeing. We have had winners on Deere. It's still a continuing trade. I really like that trade. We had winners on Spotify. We have had winners on Google. We even scalped Tesla to a very high degree of accuracy on the long side primarily. Quick short-term trades, big returns. We had huge winners in Chipotle, which I said at $280 was going to be a phenomenal winner. This was months ago, and look where it is now. It's heading towards $500. So anyway, a big plug is the Instagram account that's run by my marketing partner, who himself is a trader, is doing a phenomenal job. So big shout out to him. And the bottom line is that out there he highlights a lot of our winning trades in the form of options charts and things like that. So at the end of the day, go take a look at it. Go tell your friends to take a look at it. It's free. Some people say, hey, I don't have an Instagram account, this and that. I said, great, create one. I don't have an Instagram account aside from my little doggies and our pets. So what? So create an Instagram account, go follow. This is going to be a huge win. So people say, hey, end of the day, I want to see what happened all through the day. So, okay, if you don't have time or the energy to scroll through the Twitter feed, which has all the detailed stuff, then go to the Instagram account. Take a quick 5-minute look and all the concise, sometimes there are concise 60-second videos. That's 60-second videos, all right, which summarize the whole day. And then there are highlights of the trades, killing, big, powerful monster trades that we did. All right. So that's the way to do it. We have Facebook presence, we have LinkedIn presence, we have Instagram presence, and we have the Clueless Ape Trading FR. That's Frank Robot, okay? Clueless Ape FR, which is our free Twitter feed. All right. So we have a lot of resources out there, but the Instagram resource is what we're really getting at. We're trying to get our followers up to over 1,000, so the algo bots on Facebook can pick it up and run with it and spread it all over the social media, so our exposure goes out there. So go out there, just follow it, and tell everybody to follow it. All right, create an Instagram account if you don't have one, and click follow. And for the most important thing for members and for active traders or non-active traders, they get a quick snapshot of all the highlights of the day, all the power trades, obviously not in real time because that's only reserved for members and delivered on the Clueless Ape Trading platform on Clueless Ape Trading RT. That's R as in real, T as in time. And that's for paid members. But for the rest of the review and all that stuff, go take a look at it. So please do that. All right. Let's get straight into what I'm showing you behind you for a quick change here is the quad system, QUODD. Some of you have started using it. Some of you have used it for a while now. And this is a very powerful system. It takes a little bit of learning, just like, learning how to drive a very powerful car. You don't just get in behind the wheels and start the car. You're wrapped around a tree in 5 seconds. You have to learn the mechanics. It's like, just like any other profession, any other machine, you need to learn a little bit before you know how to drive it. So, obviously I've used it for many years. I've learned it quite well, and I tweak it along the way as it goes along, learning every day. Now, that doesn't mean this is going to give you a flawless signal every 5 minutes, but it does work very, very well. So let me start off by giving you a quick overview, and I show these charts all through the day. So, why did I start with the IWM? Let's start off with the SPY. This is a daily chart of the SPY, which is a longer term picture. Longer term pictures are very clear. This is your candlestick charts. And of course, my structure on top of it. My structure on top of it puts the stamp of the GPS roadmap directly on it. So you know where the potholes are, you know where it might go, where it can go higher, where it can go lower, and you don't basically stand there on the roadside saying, oh my God, am I going to die today? You basically, no pun intended. So what you do is, you look at this and you say, okay, I can see where it can go. I can see where it can go on the upside. I don't want to get too excited on the upside. I don't want to get too depressed on the downside. That's why we have these structured formats, and quad is one of the best. So saying all that, this is your longer term charts. Not going to go into a detailed explanation. That's going to take a while. And for that, sign up for the advanced coaching sessions. listen to my other videos when I go ahead and explain it. There are quad videos out there, but just use a cursory glance to understand what's going on. These type of shaded areas are gaps. These are downtrend lines. These are uptrend lines. The dotted yellow line is always the pivot. The markers are the markers where they normally go. I put the markers ahead of the game, and they go there on the downside and the upside. No magic there. You have an internal heartbeat reading. It's like the EKG. With simplest one, and one of the most powerful, effective ones that I use is the slow stow. Mr. Slow Stow, as we like to call it, S stock. This is not a trading chart. In other words, this is a more of a swing, longer term trading chart, keeping a picture or where you're going, the eye on the prize, right? This is used primarily to understand some big inflection points, and the ones that we use, which I'm going to show you right now, actively on the quad. I don't use the 15 minutes on the quad. I use the 1 hour, charts. I should start using the 15 minutes in the quad, but then my brain gets too bogged down because I'm using all that stuff on Thinkorswim, and I only have 3 brain cells left, right? So, all kidding aside. So, and I don't want to, I'm not as smart as some of you guys, so I can't handle way too much technical jargon aside from analyzing all the data that's hitting the market and news opinion analysis that I do on a constant basis. Try to keep it reasonably simple and pass on all the information that I'm processing, and try to be an arbiter of passing on the market's message to you guys, hopefully a little bit ahead of the game, so you guys can all benefit. So saying all that, uptrend lines, very easy to see, very large channels. Lower end of the channel is 269, way lower from where we are right now. This is where we are right now. This was the red sell-off with some of the big smash ups that happened on the broader market, even though we had a lot of wins in between. That's part of trading. But this is what happened to the general market. These shaded lines in red, or sometimes they're grayish, are your gaps, okay? And support lines, downtrend lines, 50 moving average, 34 moving average. The yellow line is your 5 moving average that I use for my fast trading purposes. Internal stochastics, as I was saying, the slow stochastics, overbought, starting to curl down a little bit. We don't know how quickly it's going to reset. At one point, it is going to reset. There's no question about it, okay? And the Apple earnings could very well reset the SPYs down to retest the very powerful broken downtrend line, which we broke out of on twice. But the second breakout was on the 12th. You can look at the date at the bottom, on the 12th of July, right there. All right. It also happens to be a gap fill here. There's a minor gap here. The upper end of the gap is 279.61. So this confluence comes into play very much, and it could very well happen on Tuesday's Apple earnings if Apple pulls back, or any other event that happens. Maybe Wednesday, the Fed says some very hawkish statements regarding rates, and the market pulls back. So this is your 50. This is your 34. This is your downtrend line, which broke out on the 12th, all kinds of good stuff, right? Now, here is something really important, because overall, I'm still bullish. Short term, I'm neither bullish nor bearish. I'm being very selective, and I'm delivering some very powerful trades out there. No question about it. All right. I'm not sitting here, scratching my head and saying, oh, what exactly is going to be this, this and that. I'm a reasonably smart guy. In fact, pretty goddamn smart, to be honest with you, when it comes to the overall markets. All right. So the bottom line is that I am being a real trader, and I'm trading volatility, and I'm trading selective stocks, and I'm giving you a very good idea of what might happen. So listen carefully. Focus your brain. Don't get emotional. Seriously, don't get emotional. It doesn't matter whether you're having the worst week of your life or the worst day of your life. Don't get emotional. That's what success in life is all about. That's what success as a trader is all about. So start focusing. This is not a child's game. Even though a child could probably play this game better by trading my charts. No pun intended. So, saying all that, here we are. So, one of the things that I noticed, as I'm looking at this, and I look at this all the time, is all the trend lines are still trending higher. Despite a large candle week, down week, on the SPYs, all this is a daily, so this was the third day. It's quite a rough day here on Monday, right there on the overall markets on the SPY. Look at this candle, the big one. All the trend lines are moving higher. Look at this. The 5, even the short-term trend line, the yellow line is moving higher. Let me change this color. Right there. The 34 is still trending higher. The 50 is still trending higher. One quick thing, there's a lot of stuff going on here, so I can't really go through everything. The distance traveled from the 34 and the 50-day moving average got stretched. So in other words, we got pretty seriously overbought. So when you get seriously overbought, what happens? We get a reset. We get 1-hour resets, and we get daily resets. Sometimes we get weekly resets that last a couple of weeks. So as a trader, you want to focus on the 1-hour resets first, then the daily, and then if you really want to if you have a multi-million-dollar portfolio that you just are using for trading purposes, and you want to be your own fund manager, running huge positions, well, that's different. Then you look at the larger weekly picture. So saying a monthly picture. So looking at this here, all the trend lines are still moving higher, and that's very interesting. We had a big crossover, which was the first sign that the markets wanted to go higher when the 34 crossed over the 50, and that was all the way back on May 21st. And I have highlighted that. So since then, these lines still climbing higher. Standard deviation got a little bit stretched, no question about it. Probably +5, +6, maybe like +5 from these highways. These are the highways, and now we are doing a reset. But despite the reset, this yellow line here, which is a trader's friend, the 5-day moving average. Some people use 9. I use 5. There are 5 trading days in a week. Simple, huh? Well, I'm a pretty simple guy. So the 5 SMA is moving higher. Very interesting. We have these are the larger picture. This is your wide trading band. And this will most probably be retested. I'm sure it's going to be retested, where we are going to basically fall apart. We're going to fall apart, and I believe that's going to happen in the month of September, going into October. That's my opinion. I've seen it happen all the time, and it's not just a seasonality factor. It's a factor of technicality. End of October is the end of the 800-pound gorilla. End of the fiscal year for the 800-pound gorilla for the mutual fund complex. There is a lot of rebalancing, portfolio rebalancing and such that happens. And that's the reason why by mid-October, we always get a substantial correction. Always. So there you go. Now, bottom line is, that's probably when we retest this level here. But that's out there, one step at a time. So that's it. Now that's your SPY on the bigger picture. You can see how structured these movements are. I draw every single inflection point where they can go, where they will go. We still have upside left towards the 285 level, which is the upper end of the scale of the channel. We have a gap here to fill, which can retest this. This can happen rather quickly. And then what will happen over the following weeks going into August, September and stuff very well could be this. And of course, all these levels are put in place. When the market was in the complete gutter and we were trading very effectively, very 1,200, 1,300 point drops on the Dow, these type of crashes, Clueless A Trading never ran away from the market. It attacked the market. We went short, we went long, and we made money. Did we make money every single day? Absolutely not. We are not some bullshit service like most of the services out there which come after the fact. And I've heard that from many members, or say, hey, it's too crazy right now, just move away. No, we stay engaged with the market, because the biggest moves in the market, the biggest days in the market come when most retail investors are not even in the market, and then the traders come to chase the market after the fact. Is that really a trading strategy? I rest my case. Think about it like an adult. So that's your bigger picture. Let's take a look at the SPY. This is the short-term picture. This is what we trade. This is what my bread and butter is. Got to pay the bills. Got to pay the debts owed. Right? Got to pay Uncle Sam. Got to give to our veterans and to our favorite charities. Got to be grateful for what we have every single day. Seriously, this is what we trade. The 1 hour chart. Now, the 1 hour chart right now, I'm going to get real to the point, is quite oversold. You can see that. Mr. Slowstow gets this oversold down here. It generally doesn't stay there too long. We've seen this happen repeatedly. Now I'm going to keep on going back and back and back. I'm going back to the 17th of July. It can create a double bottom, can do all kinds of stuff, but it generally doesn't stay below the 20 mark for too long. Does it go lower towards 10? Sure. I'm not looking at numbers. It's a visual thing. And does it bounce? Pretty much 100% of the time. Yeah, pretty much 100% of the time. So at this point, we have a big gap here. Everyone freaked out when it dropped below the gap. Then there was a big hammer reversal. And this is where we closed at. Remember, this is not real time right now. This is not picking up the after hours data, right? And the quick thing here, I will do the E-mini and a more accurate forecast on that, all that stuff, early tomorrow, hopefully before the market if I have time, because that'll give me a better idea where the markets are settling. Futures are down roughly 8 points right now because of pressure in the emerging markets of what happened here on Friday. So it'll give me a much better idea. So this is not real time. This is showing you before the fact. We're in the business of predictive analytics. So there's a gap here, and this gap on the lower end is 280.62. And I believe that somewhere in this zone and the lower Bollinger, which is at 280, we will hold. And then we'll attempt a bounce. The more the market sells off after hours, the better off it is for us as tactical traders in the morning to pick up some great trades and trade them either short-term, intraday, or intra-week for a day or two or a couple of days during the week. Selective stocks sometimes are not even bothered with the market. We've seen that happen a lot. That's the stock market. A market is made out of stocks. Stocks are not made out of the market. Always remember that. A market is made out of stocks. It's a stock market, for God's sake. So being selective is key. Doesn't mean I'm going to pick every single day a stock that's going against the market, even though I have done that repeatedly many, many, many times. So if that's the case, I'm showcasing a stock that's going against the market higher on a down market, you want to be in it. So looking at this chart here, I know pretty much what can happen. The more you know what can happen, the more prepared you can be. That's the reason why we trade tactical charts, which take into account many different I take into account many different variables in my trading model. The surrounding environment, multiple indicators in many different, I use about 28 to 31 indicators that I look at. I only show a few, and primarily the stochastics, just to keep it simple. And this is one of the most effective ones. Saying all that, pattern symmetry recognition is key. You can see what's going on here. Is it possible it does that? I think so. This is I had called it. I told you guys on what was it, Thursday? I think it was Thursday. I kept on saying, I don't have a good feeling about the market. The market's, and I was dead right. And those 28.35 puts went berserk. They went to $3 to $30. Did I hold it all the way up? Absolutely not. Why? Because I'm still an idiot. I sold along the way, but it was still a big win. But I presented the trade to you guys at $3 or so, the 28.35 puts, $3, $4, $5. And they went to $30 overnight on the Friday move down. Now you tell me if that's not a trade. And all that, again, is highlighted clearly, not only on my Twitter feed on a real-time basis, but also on the Clueless Day Trading Instagram channel. And does that not make sense to follow the Instagram channel and take a look at those type of trades and look at the charts and stuff that are presented at the end of the day? I think it is. So anyway, so look at pattern recognition, and you can see here that this is what happened. And it's very possible the same thing will happen. If we do break and we have a sharp break, then we're going to test the lower end of this band where, again, over a reflex, what we call reflex bounces, or what's also known in retail parlance and in the on Wall Street as a dead cat bounce, We can have a dead cat bounce from here, a quick one. There's a gap. I mean, there are all kinds of structures here. If you call this a head, this is the double top, which I called, then this is your left shoulder. This is your right shoulder, which also happens to be back testing this uptrending channel that we fell out of. So that's going to be the upper end of the move, where it'll fail again if this is a true head and shoulder. In the meantime, we know what the lower end is right here. Since the 17th of July, since the middle of July, this has been a major support level. So just by visual, just by doing a cursory glance at these charts, without super analyzing it, which I do because that's how I'm trained to look at these things, we can see that this is a possible bear flag, which comes down here and probably does all this retest, who knows, before the market opens, slips and slides a little, gets retail investors, as always, like I say, same old story, out of the game, and then makes a move higher. Downtrend lines, so let me walk you through this chart. Downtrend lines, wide channel. This is your wide upper end channel. You can see that, these white lines. See, one of the things I can't teach people is how to look with their eyes. I can teach them how to analyze charts and I can teach them what to look for and stuff, but I can't teach you if your eyes are stubborn enough not to look at these very, very important lines and levels and stuff. I can't teach you that. Because your mental bias, your cognitive bias, if it's extremely bearish or extremely bullish on what, in this particular case, in generally markets are extremely bearish. Nobody's extremely bullish, all right? Neither am I. But most of you get extremely bearish at times. Even though you don't want to admit it, you are. So fear causes that, and most importantly, volatility causes that. That's what volatility programs are meant to do. Volatility programs are meant to completely make your brain mush and think negative. That's it. That's what they're designed to do. By these sudden sell programs, impulse such trades and stuff like that, all of a sudden you're looking at this chart and your eyes are just stubborn enough not to look at something which I'm showing you clearly, whether it's Mr. Stowe or the slow stochastics at deep oversold. I'm saying this is the point to start scaling in. Some of you just won't do it. And it's a terrible thing. And you miss out on these type of runs all the time. Whether it's a $3 SPX call going to 30 on the short side, in this particular case on the long side, they did the same thing. See the pattern symmetry? It's exactly the same. You miss out because your brain basically said, oh, this gap here, I know he's been right before, but it's different this time. It's never different this time. It's always the same tactical pattern. Ladies and gentlemen, because the machines know where you're going to buckle, where you're not going to touch the market, and they will run the market against you. They'll know when you get too excited with the markets at these levels. And I'm saying, based on my indicators of a negative divergence here on the Stows, where we made this was a negative divergence, and I even said that. You created a lower high on the slow stochastics with the market going back to the same level you created. And you can see this on the MACD. You can see it in many different things. But this is the easiest ones to see. So use whatever you want. And then this happened. The fast reset. And that was this fast reset on the 27th, on Friday. So bottom line is, this is very much a possibility. Now, will this happen right away? No, but it's going to happen soon. So that's the bullish probability, that you get to buy cheaper prices and sell along this way towards the pivot, which is going to be recalibrated tomorrow morning, and the market's going to try to enter this channel. Remember, these white lines, uptrend lines, it's an uptrending channel. We're still, at least we closed within the channel on Friday. Means nothing. It's retesting. Futures are down about 8.5 points, 9 points right now. Emerging markets, and Europe's going to open at 3 or 4 in the morning, our time, Eastern time, all kinds of stuff. Now, we also know that we break here, then we have this level to contend with, in which case you can do a quick Not marry it, but you can do a quick short-term put. You can short the market, whether it be the SPYs or anything else that you want to do. Use any other ETF. So we know what's going on. We broke out of this trading ban back around the 23rd. And then we did what I just explained to you. In the meantime, markets are severely oversold, and it can move around oversold levels. Then all of a sudden, when you're not in it, it's going to go. Quick rule of the thumb. The bigger the sell-off is on Monday and early Tuesday, better off you're going to be for the latter part of the week. I've seen that happen over and over and over again. That's the Clueless Day Trading Almanac. Is that a rule? No, but I've seen it happen a lot because there's a technical reason behind it. Everything gets so deep oversold that there is that reflex 24 to 48 hour bounce. Let's move on. SPX, the bigger picture, which I've been right on, spot on. The bigger picture. These charts were drawn way back. These charts were drawn in the beginning of the year. Reminder, this move, what I call wave 5, I said that in my videos a few times. This was the move that got the retail investor completely euphoric, excited. We have a very active chat room. We have great members. And I remember at that time, and we had a couple of those members fall off. God bless them. I wish them well in their emotional waves of trading that they want to believe in. I'm dead serious. But we have a lot of great members, and I welcome every single new member who comes in, because this is a different world we live in, and this is what real estate trading does, shows you the new normal. Anyway, back at the first part of Jan, we had one of the biggest rallies. Right after that, there was a very sharp 3-day drop at the end of the year. They said, oh, that's it, the market's done with. The market wakes up, and we were long going into the new year. Go look at my video. The market wakes up and takes off. And this was the euphoric wave. This is the daily chart. There was only 1, 2, 3, 4 days till the market reached a peak in between all these days. The wave 5, mom and pop got excited. Retail investors got, trading investors, emotional traders got in way too excited. Chat rooms like dead packed. And guess what happens? The market just collapses. Now, this collapse was extremely vicious. This could have gone us, it basically, we went short-term bear market style. This was like cliff diving, a point where you went like 20 feet under the water and you think you're not coming up. Now, through all that, we traded and we did well. We traded bits and pieces of these big sharp sell-offs during the day, and we also went long for these reflex bounces. And I'm not going to sit here and rehash all that stuff. Go back and look at our performance on the Twitter feed as well as on the Clueless Day Trading channel. We did not have a terrific Clueless Day Trading Instagram format at that time, so the trade highlights obviously don't go back that well. Now we do, so you got to have everyone follow it and yourself follow it. If you don't, honestly speaking, that's idiotic if you ask me. So saying all that, through all this massive and we used to get 400 point type of days. Now we get like a 200 point type of volatility. Through all that, this is where we are right now. So overall, when you just take a quick glance at this on the overall picture, it's not negative. Doesn't mean we're not going to have 100, 200 point drops, and we're not going to have big blowouts on certain companies on the earnings side, which we still make money on. Boeing, remember how much it fell after earnings? 7. Those few calls prior to the day into earnings were upside down, and I said it was going to go higher, not because I felt like it, because I showed you guys on the chart, and it blew past it. Now people are there sitting there trying to chase Boeing. Yeah, Boeing's going to go higher, but hey, I called it when it was down at 342 and the stock went to 362. That's a lot, 20 points on Boeing. Anyway, without going into individual stocks and stuff, you're looking at this overall picture. Still looks pretty damn good, if you ask me. So in the meantime, the same thing, like I said with the SPYs. We moved away rather sharply. The standard deviation got overstretched. In simple English, we got majorly overbought. And that standard deviation from the 34 and the 50 primarily, which are the highways that the market normally travel in. Either they get on a sharp sell-off, they go well below that, and then they revert back to the mean, and then they go nuts, That's the market. It gets manic depressive. Remember one thing. People say the markets, oh, I'm going to get into the market. How many times have I heard that? Even your little voices in your brain say that. Oh, I'm going to the market when I'm feeling a little bit better about it, this and that. Well, we are giving you charts and precise technical structure and roadmaps where you don't have to, where you can feel good about the market even at the worst possible time. Now, what do I mean by that? By the time you think the market's good or normal, which it never is, the markets are never normal. The markets are either overbought or oversold. Either they're manic depressive. Either you're very euphoric or feeling great here, euphoria, or you're just depressed out of your mind because some trade is upside down and your account is looking way down. Except this is the time we need to add a little bit more and make it back up big time. But a lot of you don't do that. It's not my business. I'm just telling you. So the markets are never normal. Never. So when you listen to these talking heads on TV and you listen to the pundits from some pundits from Wall Street, a lot of the guys are pretty great too. Okay, they'll tell you, yeah, I'm not feeling too good. Let me see what happens. Let me see what happens. All right, by the time you see what happens, it's happened. Now, I'm not saying you have to be fully engaged in the market all the time, and that's another very important point I want to make to all my traders. You don't need to be fully engaged in the market all the time. Sometimes you just got to sit back, but always look for tactical possibilities based on my alerts, based on what you're looking at, and be engaged to a certain degree. Because the biggest rallies, I repeat, come off where you're getting those 4, 5, 600 type of returns on the indices, on the SPYs and the SPXs and the Qs and the RUTs. Don't come off when the markets and when you're feeling good. They're coming off levels when everybody's feeling bad. So, and they are very sudden. And my structured charts have shown that and picked up on those a day before or sometimes hours before it happens. That's the reason why I say you have to be engaged with the market. You have to be engaged in battle. Can't sit back. But that doesn't mean you have to be overtly active on any certain day. Remember that. Sometimes you just sit back a little bit, lower your position, your exposure, like I told people to do so prior to the big drop on Thursday and what was it? The big drop on Friday, where the SPX puts the 28.35s went from $3, $4, $5 to $30. All right. So looking at this chart here, not to overanalyze, is the same story. We moved away too much, overstretched, standard deviation higher. Now it's reverting back to the mean. Reverting back to the mean doesn't necessarily mean we got to come back and test 2761, which we can. In which case it's a screaming buying opportunity. Uptrend lines are all intact. And so far, this level should hold the 2810, 2800 level. Slip and slide a little bit to 2790. You should see a reflex bounce, which I showed on the SPYs, like that. Now, saying all that, we are watching levels very carefully, and selective stocks might not even be bothered that much with what's happening. Techs are under pressure. There's no question about it. Doesn't mean you can't even scalp. It doesn't mean you can't scalp a couple of points here and there. That's active trading. But just in general, no question that techs are under pressure. We'll see what happens with Apple. Apple chart has been shown clearly on Friday. A couple of Apple calls were bought, or the 190s, and I've been right on Apple a lot. When the Apple was in the 160 level, they said that's it, it's all over. We went long the earnings, and do you remember what we did? Well, if you don't remember what we did and you weren't with us at that time, why don't you go back and review the video on Apple and thing from that time on my YouTube channel? We killed it. And then Apple kept on climbing higher. That's what we do here, guys, okay? Not right all the time, but right a lot. Make right a lot great again. How about that? All right? So nothing really negative here. Slow stows are overbought. Watching this for any breakdown. In a strong market, slow stows can come down to the 60 level and bounce. We have seen that happen quite a bit. Look at that. When it looked like it was going to just break down, the slow stows basically started turning. So did the market. You can see that happen here. If it goes below the 50 level, generally the resets come very quickly. These resets that happen on the daily charts, on the SPX buys, the IWMs, QQQ, are extremely powerful buying opportunities. I'm talking extremely powerful buying opportunities. And this will reset all the way down here. I don't know if it's going to happen this week, because that's a 700 to 800 point drop you're talking about. But this will happen when we retest the 50 and the 34. And once it retests the 50 and 34 and this downtrend line, you think it's just going to bounce directly off there? No. In my opinion, the panic will set in and you will basically go below that for a couple of hours, if not I would say a couple of hours, not a full day or so. It will retest this breakout here. See that right there? It will retest this breakout somewhere around the 2730 level, which seems a long time off because we're at 2818. So that's roughly about 100 or 90 to 100 points from here. That means you're talking about 540 to 600 points in the Dow. But it will happen. It's going to happen probably in the month of August. Okay, and if it happens this week, well, I doubt it, but anything can happen. Then you better be ready to buy, hands down, because there will be a reflex bounce. And that's when this thing will reset on the daily, will reset all the way down here. Let's move on. In the meantime, just letting you know, this still stands. So a quick move up towards the 2854. I said the 2830 level. If you recall, we bought the 2830 calls on Friday, which we were up on nicely. They went from 3 to 5 within a matter of minutes. They closed around 4 or so. You could play those very nicely. So you don't need to sit here and prognosticate what will happen weeks down the road. Take what is in front of you in the form of tactical trades, because this is more of a swing picture on what can happen. That's it. Let's move on. The next one is your SPX hourly. That's our bread and butter, at least my bread and butter. That's what we trade. Just with the SPY hourly. And this is not, it's the same thing. Every line means something. This was your pivot on Friday, which is going to recalibrate tomorrow after the market opens. That was at 28.39. Big sell-off, very large sell-off. Nothing changed. Uptrend lines are still intact. Stochastics deep oversold. Can slip a little bit lower. Futures are down about 850 right now. Again, the zone to buy is the 2800, 2811 level right there. Each line has been, all the numbers here on the side. Just, I repeat, tell your eyes to look at it like you're in a fifth grade class and your teacher says, what number is that? And you raise your hand because you're the teacher's pet and you say, 281175, Miss Jones. Right there. All right. Gap. Breaks the gap. We know what the next level is, 2795. If you're a fast trader, you can trade this move down here. What's the next level here? Which I have highlighted, 2789 to 2795. Big gap fill here at 2775. These are big moves. If this line breaks, you want to go short. Buy a couple of cheap SPY puts or SPX puts. But remember, by this time, you will get these reflect bounces, which you always get. Whether they carry on and move to these higher levels, we don't know. All I know, we're going to head towards the 2820 to 2830 level, and that's going to happen. Whether they happen from here or whether they happen from slightly lower levels, we shall see. And these are all these big gaps, which at one point will get filled. There's no question about it. Now, if you're that bearish and you're basically looking at some real bearish, hardcore, grisly sites and traders that you follow, they're expecting all this to happen right away. It never happens right away. On the upper end, we have the uptrend channel, which was violated, fell below that at 2839, 2840, close to the pivot. If it enters the upper end of the zone, we're going to move fast. And what's moving fast means? It simply means when I show the charts, know how to read them. Let me make it bigger. There's your uptrend channel. There was your acceleration channel. Hope you guys, hope you're focusing with your eyes, which are hopefully talking to your brain. Remember, you guys still got to answer Ms. Jones when she calls you in class. Here's your acceleration channel. Here's your overall macro uptrend channel. You can see that line right there. Oops, sorry. There. And here's your acceleration channel right there. Okay. So if we break above here, we're going to come and retest the lower end of this acceleration channel, trying to re-enter it. If we fail, we'll see. We probably, we might fail because that also happens to be the right shoulder. Sorry, right shoulder, left shoulder also happens to be around 28.30. If it does enter this upper acceleration channel, it's going to be a fast move up to the upper end of this broader macro uptrend channel, which is around 28.53. If we break above that and things just go berserk, and it's happened, remember that happened last week, that big sharp move higher that we were in? Well, if it's another big sharp move higher, the most we're going to get to is around 28.70, 28.75. So that's where we are, guys. While I have it, I'm just going to make this real quick here. I think I've covered quite a bit. And this is the trading part of the picture, the 1 hour charts that I use. Okay. This is your longer term picture of the IWM, which I called a long time ago, back in February. Said it was going to go to 170. IWM's RUTs were going to go to 1700, and they did. So as you can see here, we're close to the lower end of the daily Bollinger, which is around 164. You have this major support level at 162. This is not fully oversold yet. Qs, big sharp down. Techs, obviously. This has broken below, and a reset seems to be in progress. And we are the mid Bollinger. Can it have a reflex bounce from here? Sure can. Does it have to retest down here? Doesn't have to, but it can. And that's a long way down. Will it happen right away? No. I think it's going to find major support at the 175 level or so. 175, 176 level on the Qs. Uptrend is still intact in between sharp volatility. So when some of these gurus are telling you that's the end of big tech, well, they're dead wrong, as they have been since 2009 or even before. IBB, biotechs. I don't know why this Bollinger's shaded area is it's like red clay, right? Like a tennis clay court. I don't know if you guys ever played tennis on a clay court, but it's pretty wild. So anyway, bottom line is big sharp pullback below the 50, lower Bollinger 164. We're getting close to a major low on the IWM. Close to it. Okay. This is IWM. What is it? It's IBB. Okay, sorry. Let's take a look at the XBI, which basically the biotech index, the secondary, the smaller one than the IBB. And you can clearly see here in the lower end of the Bollinger, we are oversold. The Biogen move, which we did extremely well on overall, and then the last round down, and I kept on buying it lower, because it's so volatile. It went wild. We took nice profits, then we bought the higher strikes, and those are the ones that are down. And with cost averaging, looks pretty damn good. This was primarily a Biogen move because it's a major component of the biotech index, and which caused other bios to move down. But I look at this as an opportunity to scale in, not an opportunity to bail. Looking purely from a technical standpoint. On that note, have a great evening. Thank you for listening. I'll try to do a quick e-mini broadcast tomorrow morning. So far, futures are down approximately 7 and change. Futures don't tell us really anything right now because everything is very fluid overnight. We have a big week coming up. Aside from the political garbage back and forth, the real thing to watch out for are the central banks and what they say. And I know Mr. Powell, Jerome Powell, despite good old Donald Trump poking his nose into Federal Reserve affairs with his comments, means nothing. Every single US company and the Federal Reserve banks need to be independent in what they do. When the government starts to poke their nose too much into things, into private business, we call it socialism. And I don't like socialism, and I hate communism. Free enterprise, guys. Free capitalism. God bless America. See you guys tomorrow. Good night.